This is the Euro New Zealand on the 15 and we have a flag pattern that's set up. You can see here we have actually broken out of the channel. What I'm going to do is the higher time frame analysis though. Did take a trade on this yesterday and it won. What I'm noticing here is that we had this pullback and we are now making our way up to retest the closes of these candles up here. Since we are close, I would assume that we are going up to test this level. We do also have a higher level here on the 240. So I'm just going to put a structure level in there as well. Not a great deal here. We had the market that came down and now it's working its way up. This is not the flag pattern, by the way, for me. Besides, this has now broken out of the channel, so there's no pattern here to short the market. So since we are making higher highs, I am looking at the market going higher. Here on the 60, what you should be noticing is that we have a very bullish candle that made a new high. It did not hit targets, it did not hit our projected structure level, and then we've been trading sideways. If I also zoom out a little, just like in the video I did yesterday, we are trending here, so new high, outside return, new high, outside return. And then this was the trade yesterday, new high, outside return for a high and tight flag, new high, outside return, another new high. This is the outside return and we are looking at the market carrying on up. Now, what has not happened here is we have not come into retest the previous outside return just here. So what I'm just going to do is put a structure level on at where structure came to and look left to see if there's another level of structure price did come into, and it did. It came into this, and there's a very big wick here. So this is certainly an area where the market could turn. We take a look at the 15, which is where the pattern is. Now, I'm only just doing my review, so I haven't got the optimum entry, but I have got a more conservative entry. So we cannot see the pole as defined here because it's actually two candles, but nevertheless it's still a very good pole. You can look at this as not quite a sore thumb move, but you can see that the market arched here. We came down to give us the start of the pole and we have a nice rally. So this is the start of the pole for me. And then we draw out the channel on the closes of the candles. And what we do is we go ahead and duplicate this, we move it down and we have it on the closes of the candles, and we look for a minimum of 4 touches. 1, 2, 3, and the 4th touch came here. The optimum entry would have been this green candle here, the higher high, higher close. But what happened is we then broke out of the channel the correct way and we're seeing a pullback now. I was hoping that we were just going to come back and just pull into the structure level. We can actually have the structure level a little higher because that's where the wicks come to, but we didn't quite come to retest, and then we've put in several higher high, higher closes. So the market could actually come down here and retest. We haven't done that and I didn't want to miss the move, so I've got involved with the trade. Stops here very easy because we've had the breakout. We just go an ATR below the low. That's all we do here. The final thing that I wanted to check was that we did hit at least a 38.2 fib, and we did. We almost hit a 50%, so it did validate the trade for me. So in terms of targets then, I'm going to go ahead and look for that 127 extension as usual. Now we do have quite a big wick at the end of this flagpole, so it does mean that targets are further away than normal, which should give us a better reward to risk. And there we go. So we have the 127 up here. We have 2 structure levels, this first one which is based on the dailies and the second one which is based on the 240, and you can see that our targets are before that, so I'm very happy with those, and I want to be 5 pips before that 127 target. So it does mean then in terms of risk we're looking at 36, and in terms of reward we're looking at 62. We're back for the final update on this trade, and a little bit painful this, if I'm honest with you. What we did is we got our breakout, we pulled back, we got our breakout again. Now I was front running by 3 pips, which meant that my target was there. And then I'd actually come within a few pips of my target. So I rolled to break even, and I've just been stopped out for break even. What a real shame, you know, being up about 58 pips there on that trade, and I held it for a long time. You know, we moved sideways for quite a while. We just never quite got up to those targets. So out for break even.